Good morning, afternoon, or evening, ladies and gentlemen, all in crypto here, and welcome back, guys, for what is going to be your daily cryptocurrency market update. In this one, we're going to be quite news focused because there's lots of things taking place internally within the crypto space, and we're also, what we try and do in these market updates is look at where the cryptocurrency market is relative to the sort of broader world of finance around us. And try and figure out where it's potentially going, where we are in this bull or bear market, and what essentially is to come before us. Now, I'm not calling this a bull market by any stretch of the imagination, guys. We've adopted, and it's important that I continue to reiterate my stance, a non-bearish approach really from January the 1st, after being a bit of a bear or an aggressive bear all of last year. And we actually did say that we had put some money back into the markets on the 5th of January. I did an altcoin video where I actually showed a Patreon meeting on the 5th of January where we actually spoke about buying. This was before this candle, of course. And it now seems like that may have been a good idea. However, just because we're not bearish doesn't mean that we're calling a bottom. And people's not like the fact that I'm basically saying to you right now that I can't rule out a new low, but what I can say is I'm not as bearish as I was all of last year or, since 44K for Bitcoin all the way down. And we actually did reallocate for the first time in a long time. But we will get to the price and everything. I want to just really get through some of the news because there's a lot of it. We'll also talk about the fact that Jamie Dimon is changing his tune about the economic hurricane. So we actually covered this. Jamie Dimon came out and said there was an economic hurricane on the horizon. And he's now saying, actually, it doesn't seem like that's going to be the case. There's a few clouds, but he didn't mean to predict widespread collapse. And also you've got the likes of Paul Krugman saying a similar thing. And these were people we actually covered the articles that spoke about their stance on the markets. And we were with them on that. And actually, isn't it interesting how, we're all kind of somewhat changing our tune in regards to this drawn-out bear market, or that's led by higher interest rates, and actually now kind of going, well, look, markets are going to start pricing in what's coming down the road, and that environment has completely changed with lower inflation, and the only real threat is something breaking, but something typically doesn't break, and we did this in yesterday's video, until the yield curve is uninverted, which means that markets may rally. So I would definitely say I'm more bullish than I am bearish. We've got a number of other things. This is from Macro Alf. If we really get a proper recession in the SPX, ultimate low might be in the 3,200s to 3,400s. We also spoke about this. I released a video last night about 10 p.m. for me, talking about the debt ceiling. So lots of people throwing this around and saying, oh no, the US is going to default. Do you really think the US will default and not pay their debts for the first time ever, which will just basically devalue the debt system and call it all into question and cause complete chaos and corruption over upping the debt ceiling like they've done continuously? And we've actually did speculate, as people that do cross-market analysis, and say this is probably why the dollar's had such a bad time, because people are pricing in them raising the debt ceilings, thus devaluing the debt and what is currency backed by debt and how does it come into existence. So we've done a whole thing on that. And also Binance was final destination for millions in funds from Bitslato. So this was the other day. There was some pretty shocking news that the US regulators were going to come out and they had a crypto statement to make, and it had everything to do with this exchange. This would explain why Binance actually had those money laundering charges on them previously. So, like I said, a lot to get through, guys. So let's get through it all. Crypto lender Genesis files for bankruptcy in latest blow to Barry Silbert's DCG empire. So this is, of course, Genesis Trading filed for bankruptcy after suffering crippling losses from the collapse of FTX and hedge fund 3 Arrows Capital. So this is the kind of contagion that we've also spoke about. Some of Genesis' largest clients, including Circle, so there'll be more collaterals as a result of this. And of course, the Winklevoss twins, who own Gemini Exchange, that used Genesis Trading to facilitate their Genesis Earn program, their customers have been absolutely scalded as a result of this. And Tyler's and Cameron threatening legal action against DCG CEO after Genesis bankruptcy. In actual fact, if you understand how bankruptcy works, it means that you can't touch the individual behind the company. The company basically allegedly owes around about $3.5 billion dollars to top 50 creditors. You actually can't go after the individual behind the company. You can only go after the company. That's it, you know, this is kind of how companies or corporate companies work. I've actually had people go bankrupt on me that have owed me money in the past. And trust me, there's nothing you can really do to get the individual. And I've actually had personal stories where I've had somebody go bankrupt on me that's owed me money, or their business has gone bankrupt, and the individual's still been swanning around in a at the time a 16 plate Mercedes. Anyway, so this is, you know, what does this mean really is the interesting thing. Well, if there was more contagion with DCG, you've got to remember DCG owned Grayscale's BTC, which we've said actually potentially could be a bit of a lead indicator for Bitcoin and show you what institutions are doing. You know, it ran before Bitcoin did. If there was wider spread issues with DCG, yeah, I think that would be a real issue. But we've kind of already known, and markets have probably already priced Genesis in. You got to remember, at this point, we've retraced the entire FTX move, which we have said was on the horizon. Remember, we were doing daily Bitcoin TA videos. They didn't get much love. You know, we called this beautifully. Just chopping up the ranges and looking for targets. All hit. And then we were looking for higher targets, higher up. We will actually talk about Bitcoin on the technical level, because actually it's very interesting what it's doing here. And, you know, we remember 5th of January was here, ladies and gentlemen. So people say we're late to the party. We often are late to the party, just not this time. So, yeah, what this means, you know, if there was further contagion, I think it would be pretty devastating. Maybe there are some smaller companies that suffer as a result of this and the continued blows that the crypto space has dealt out. But this is pretty big news that these guys are filing for bankruptcy. It's another one bites the dust, and we'll see what's to come from it. Moving on to some more sort of macroeconomic news, or we'll actually finish off with some, or finish off the crypto news first. Binance was final destination. So essentially, this is probably why Binance had those money laundering charges slapped on them. I can't remember exactly where it was, but it probably had a lot to do with this. That this is not something I was paying attention to. Bits Lato, I hadn't even heard of it until they were called into question. But it's certainly interesting. It explains what was going on with Binance. I think that's all the crypto news that we have, or the main crypto news of the past 24 hours. Before we do some TA, let's jump into the macro environment. Remember, this macro environment is being controlled by interest rate hikes. Interest rate hikes, in my opinion, are coming to an end. We did this by doing an experiment looking at the 2-year yields for the US, and said that, you know, they kind of topped out at about 4.9. Rates aren't going to go much higher. That's about where rates are likely to go. Actually, some markets are pricing them in significantly lower. You got the Fed still coming out and talking very tough. Christine Lagarde actually made a comment the other day that we can look at potentially, saying that, you know, if you're a market participant, you might want to rethink what we're doing. And I do think there's an element of that. But there's also an element of these guys having to talk tough. Them talking tough is actually monetary policy, because it impacts the markets and impacts, you know, people might, it has that demand destructive event, because if they're scaring people, they're not going to be forthcoming with what they're buying. But this was interesting. So Jamie Dimon is changing his tune about the economic hurricane. And essentially, after difficult 2022 for investors, there may be a ray of light peeking through at the start of the new year. Take heart from JP Morgan Chase CEO Jamie Dimon. He clarifies Tuesday that maybe he shouldn't have said last year that an economic hurricane is coming. There are clouds for sure, but he didn't mean to predict widespread collapse. His bank is still hiring. Nobel Prize winning economist Paul Krugman said maybe his worries about the outlook were overblown as well. A soft landing is more likely than it seemed a few months ago. We've actually spoken about all this. Outside the US, things don't seem as bad as they could have been. China's also reopening, so that's also quite a bullish thing for markets generally in the supply chains. You know, this is the thing. I think actually some people are rather annoyed that we came out in January and said, actually, we're not bearish anymore after being bearish for so long. You've got to understand it's my job to do that. It's my job to look at the markets, regardless of what the sheep are saying, you know, and going, yeah, actually, we're going to change our tune here. Doesn't mean we're all in crypto right now. What it really means is, you know, we took a position. And that's all I'm really going to say on it. And anybody who wants to find out more about that, you're welcome to join my Patreon. If you don't like what you're hearing because you disagree with it and you're still expecting lower prices, you know, I don't know why that's an issue. You've got to understand that how markets need both buyers and sellers. If you want to continue to be a seller, by all means. But right now we're saying we're sticking our neck out when everybody else is still bearish, calling for multi-year bear markets and saying, actually, at this point, we're not bearish. We still think, yeah, okay, given everything that's going on, granted, there's potentially lower prices, but we see reasons to be bullish, and we've actually gone over them, and that spot, doesn't look too bad here. But make your own mind up, guys. So this is from Macro Af talking about how, if that is the case for the S&P. Remember, guys, we did expect a pullback this week. We've got it a little bit less than what I expected. We actually speculated on the S&P being on this kind of, we've all looked at it. We looked at it 1,000,001 times, guys, and we can look at it again just for argument's sake. But we did call for a pullback. We actually thought the dollar would be a bit stronger. Dollar's been horrific, to be honest. It could have everything to do, though, with them raising the debt ceiling, which is looking very likely that they're going to have to do this. You actually have the bear narrative and the bears pushing the fact that they think the US will default. If you understood what it meant for the US to default, you'd understand that they will not do that, especially under the context that they have the option not to. The debt ceiling is more like a rooftop bar, all-you-can-eat buffet with narcotics freely available. That's what the debt ceiling is, guys. This was interesting. So this is US rate versus credit card debt. So the US savings rate is obviously in green, credit card debt's in red. I brought this up because I want to make a point on metrics that are showing it's a really bad time. Well, if you look historically, bad times have been the right time to buy, certainly when it's peak bad times. Now, maybe that's me filling my own narrative here. But, we'll see. And take for that what you will. But there is still this sort of quite, I guess, gloomy economic situation with rate hikes and them not really stimulating. But you've got to understand that actually that's been priced in over probably the last 2 years or year, and probably aggressively priced in. It's really been priced in since November, when all markets sold off in expectation that rates were going to go up. So I don't really want to waffle on for too much longer. This is rates going up for the first time in February. Look at what your markets did on the pretext of that. I mean, even something like gold, it sold off more with it. I mean, gold's done fantastic. It calls for 2K gold at the moment. It calls for silver going through the roof. But using Bitcoin and the SPY as an example, they sold off in preempt to this. Will they rally on preempt of it potentially going up? And actually, if you look at markets, where am I? Here I am. They're potentially pricing in rates going up, into the future now. So they're no longer looking for downside, more looking for upside, in my opinion. Anyway, that's all I've got for you in this video, guys. I don't want to keep you on for too much longer. If you've enjoyed this content, a like is always appreciated, so is a comment. And I look forward to seeing you all in the next YouTube video. Have a fantastic or a fabulous Friday, guys. See you in the next one.